remember several years ago, the Africa narrative was huge all over the world. And everyone's like, invest in Africa. It's the next destination. It's all of this. And then people came and realized, okay, it's a bit more complicated to invest than it was before. But now, with funds such as this and us providing, dollar-denominated products, it really just opens up to anybody and everybody to bring their funds. And what I love about this country, Kenya, is that our markets and our treasury department and just our financial system allows for free flow of capital. And when you look at across Africa, honestly, we stand out as a nation where people can safely invest out of all the countries on the continent. Yes. And so we really provide fantastic opportunities for anybody from anywhere in the world. True. But anyway, so just to sort of look at money market funds, you described the different CIS products. Yes. And some people know them as unit trusts.
Yes.
The money market funds, the fixed income fund, balanced fund, and equity fund. Yes. And then you talked about this special fund. Yes. So somebody may have heard you, but they're just like, okay, I didn't get it. What makes it special? Why is it called special? So I want you to just take a moment and describe the difference between a money market fund and a special fund.
Okay. Thank you. I want to describe it based on what we call asset classes. Asset classes, just to break it down, is an investment vehicle. One of the investment vehicles, let me give an example, is placing a fixed deposit. That's actually an asset. But you can put several assets into a class because they are related.
It's just groupings. I think
groupings.
Yes.
Yes.
Guys, what happens is in financial markets, we have people in financial services like accountants, like bankers, like insurance people. All these people find it convenient to put financial assets into groupings called asset classes. So that's what Ian is talking about, like deposits with banks, like treasury bills. Those are different, even real estate. Those are different asset classes. So I'll allow you to continue.
Thank you for that. So the asset classes allowable in money markets may be a bit restrictive because also they are looking at who is investing, how much exposure do they have, what's their liquidity concerns, and how much risk they can take.
Liquidity concerns meaning?
How fast can you access your money when you need your money? Because majority of the money markets, basically after the first 7 days of placing money, you can always withdraw as fast as you want. And also the minimum required, you will have some having as low as 1,000 being the minimum required, 1,000 Kenya shillings. So,
by the way, there's one
that
you can deposit 10 bob. Did you know that?
10 bob.
10 shillings. There's one. I just discovered. But there's,
that one, yes.
So there's 10 shillings minimum, there's 100, so it depends,
Oh, okay. Yeah. That's the flexibility of the money market.
Yes.
However, still with that flexibility, on the flip side, that is on the investment side or the fund management side, they are also restricted on where they can take the money. They can't take that money and decide they're going to start building apartments.
No.
They can't do that. So they've been given a time horizon of maturities of all these asset classes to 18 months. And also which asset classes, not just any. They're the ones they have been told you can do 1, 2, 3, 4. That's what happens. However, when you go to the special funds, the restrictions are not as stringent in terms of duration and even the asset classes. And I'll give examples.
Okay.
For the money markets, you're supposed to do what you call the cash and cash equivalents. Those are the call deposits, the fixed deposits.
So call deposits are deposits with the banks that are put on call and you get special rates.
Yes. And also the fixed deposits with banks or bank placements. You can do the normal treasury bills offered by the government. Rarely are they allowed to go out and make investments outside our jurisdiction. They are also able to buy government securities like bonds, but for short maturities. So if it was a 5-year issue by the government, but it's almost maturing, they can buy that is maturing maybe in 12 months, 13 months, 14 months. They can do that. They're able to do that. But they are not able to go and buy a treasury bond that's maturing after 10 years. They are not able to do that. On the flip side, if you look at now the the special fund. The special fund first allows longer tenors.
Yeah.
The only thing is there are definitions in whether you are holding to trade or you are holding till maturity. That one, I won't go into the complexities of that. But beyond what the money market people can invest in, they are able to go to leverage products. And what do you mean by leverage? Leverage is where you put something small and you are able to trade with something bigger. I'm trying to look at the most practical example that I can. I don't want to use betting because we are not.
You can just use Forex, it's okay.
Forex,
CFDs,
I can use CFDs. In CFDs, there is something called leverage, whereby you are told that for every $1 you place, you are able to trade with either $100 or $400. And I'll give a practical example, whereby you place, let's say, 1,000 shillings. 1,000 shillings, the one that you give to your broker, is called a margin. But your broker tells you can trade up to 100 times what you have placed. So you place 1,000 shillings, and the broker tells you can trade products worth 100,000. So if you utilize the whole allocation and buy goods worth 1,000, the good thing is, if for whatever reason the prices go up for you, they go up by 1%. That means your whole portfolio is now 101. If you sell and you get the 101, you are going to repay back what you borrowed, which is 99,000. So you are left with 2,000. The 2,000, remember, you only put 1,000. So essentially, your 1% increase in an asset value has translated to 100% of your growth. And you always say leverage is a two-way sword.
It is.
So if the opposite happened and you lost just 1% of your portfolio, on the flip side, you would have lost
half.
Total
of it's
your
everything.
Investment.
It's everything.
And that is what 100%. In Forex is called blowing an account.
Yeah.
So it's a two-way sword. So it's a good thing and a bad thing at the same time. And the only thing you can say is, just the way you can say, even about cars. Cars are good, but cars, people die using cars. So it's how you manage what you've been given. It's how you manage leverage. So part of the products that we are exposed in the special CIS are leverage items. Some of them can be what we call trading in CFDs, or what people call as online Forex.
Or contracts for difference.
Contracts for difference.
They're derivatives.
Yeah, they're derivatives. You can trade in normal standard derivatives, that is options and futures. You're able to do that. And maybe with some institutions, you're able to place such margins and trade bigger notional amounts, maybe 1 to 10, and hence enhance your returns. So those are the advantages of collective investment schemes that are under the special funds. Also beyond that, we are able to trade, even if not leveraged, on other products that are not offered in the money market space. Some of them are the international stocks. We are able to work with the sovereign bonds. Sovereign bonds are what in Kenya we have the Euro bonds, Nigeria has, Ghana had issues, Egypt. You can go to the UK gilts, you can go to US treasuries, all those are sovereign bonds. Those ones you are able to trade and you have exposure to them. So there are so many asset classes, and even EFTs, you can do that. ETFs, you can work with ETFs. You can work with precious metals, either as CFDs or as derivatives, it's possible.
Or ETFs as well, like the gold ETF.
Gold ETF that's being offered by ABSA on our NSE. So the offerings are numerous. Yeah. It's actually for you to choose. And what ends up happening is we expect that every special CIS will be different.
Absolutely.
Will be completely different. And that's why I'm loving that so many people have taken up these lessons. And people are able to see the variety that is happening in this market. And it's all financial depending. And it's for the best thing for all investors to get all this exposure.
You know, as you were describing, I felt tired. I'm just like, can you imagine me sitting at home in my office, trying to manage my portfolio that I have put in these different instruments, some of which I don't know how to do.
Yes.
It's just a lot of work.
True, true, true.
What does it take to run the special fund that we're running right now in terms of resource, and talent? Because sometimes people think that we're doing patapotea, like just describe what, just briefly, what it takes to be able to run something like that.